Welcome to another episode of DB Homes for Hope. I'm Coach Davina. We have a treat for you today.
I'm in my new era. I'm better in my new era. I'm better in my new.
We've got my college buddy, my soror and friend, and she is what? A mortgage broker. We have Carmalita Keith from Next Mortgage. She's going to come and talk to us about after you have that 650 and above credit score, after you have reduced your debt to income ratio to 43% and below. We know we want to get to that goose egg of zero. So Carmalita, I am just so excited to have you here today. Thank you for joining us.
Thank you so much for having me. I am excited to be here and excited to talk to your audience about becoming homeowners.
Yes. Well, tell us a little bit about yourself.
I'm originally from Petersburg, Virginia. My background is basically education. I spent 20 years in the field of education. I spent a little time as a high school teacher, and then I moved into adult training. So I'm an educator at heart. But I recently transitioned into the real estate world. I became an investor, a real estate investor. My family's always had rental properties and things like that. So I kind of grew up with real estate in my blood, but I then transitioned to becoming a mortgage loan officer. That's the world I live in today, and I'm excited. I love helping people get into their first home. I love helping investors increase their portfolio. My lending philosophy is that my clients are empowered and not overwhelmed. It's important for me that the clients are educated on the process, on what's going on in the real estate industry. We might use terms and say things that, a buyer may not understand, and they might not understand why things are happening the way they are. And so my philosophy is to make sure that I'm transparent with the buyer, with the client, make sure that the client understands what's going on, and then make sure that I understand their scenario and their goals so that I can match them with the right loan program.
This is super important. Notice that she's an educator. She wants to make sure, just like I do, she wants to coach you to what's the best program and product for you. It's not cookie cutter because some of us have purchased homes like 3 or 4 a year. There are others, this will be your first big purchase. So we want it to be a positive experience. We want to make sure that you pay the least but get the most, and that you don't purchase something that doesn't fit your life goals. Because again, I want you to be in it for at least 5 years so that you can get the bang for your buck of the house.
And every client is different. Again, I look at your scenario, what your goals are. Like you said, if you're planning to move out of that area, those kind of things, can help me, again, pair you and put you into the right program. Again, every client is different. My ideal client is a client that is responsive and organized. Being responsive is important because it helps us keep the loan process moving and progressing, and it helps you get to closing faster. I mean, I know that sounds like a simple request, but you do have those clients where you say, hey, I need this document from you, and they may have it, but they are not urgent about, they have no urgency about getting it uploaded or sending it to you by email. And again, those kind of things can really slow the process down. I love a client that I can call and say, hey, we need this additional document from you. And they're on the money with just getting it right to us. I love, that's again, my ideal client. And then a client that kind of has their docs together. And it's a little easier with technology because now we're not looking through mail pieces and paper documents trying to find things. So if we need additional bank statements, you can go right online and pull those up in most cases. So most of the docs are pretty easy to access now. So the organization piece is a little easier than it used to be back in the day.
You don't have to worry about clients from DB Homes for Hope because they're organized, and we're going to have our financial fat files ready because we know what you're going to ask for. You're going to ask for your last 3 months of your bank statements. You're going to ask for your last 2 or 3 pay stubs. You're going to ask for these things that will see that they qualify for the loan. She's going to pull the credit report, but we're going to make sure that you already have that 650 and above before we even call her. When she pulls that credit report, the DTI will be obvious that is below that 43% and that the credit score is 650, not Credit Karma and all this other stuff. She wants to see that FICO.
Well, it sounds like your clients are my ideal clients because you make sure that they have it all together before they even get to me.
Yes. They're spoiled. We want to make sure it's an easy, smooth process because we want to hear that what? Clear to close. Clear to close.
That is the goal.
Right. That's like magic to your ears, right? So now that we know your ideal client, someone that's responsive, someone that will You asked for something and bought it, it's there.
Yeah.
So what loan products do you offer?
I offer all types of loan programs. I do for obviously the first time home buyers. I'm always happy to for someone to get their first set of keys and become a homeowner. That's always so exciting. Again, sometimes we have people who are not in their first time home buyer purchase. They are, moving to a new location and they're, ready to purchase their second home or they're purchasing investment home. So I do VA loans. I do first time home buyer loans. I do again, secondary homes. I do investment purchases. So I have a wealth of clients who are expanding their portfolio, buying investment properties, cash out refis. The rates are, going down, especially if you purchased when the rates were up a few years ago. Rates are dropping. So I've been doing a lot of cash out refis. A lot of people are doing HELOCs, reverse mortgages, all types of different loan programs that we offer and that I love to help clients with because again, all of these purchases, these real estate purchases, whether it's a cash out refi, whether it's a HELOC, whether it's a reverse mortgage, first time investor, they're empowering. They again set you up for financial success in the future. And I just again have a wealth of loan products that can fit a client's particular scenario. And so I love to talk to clients, get to know again what their goals are, so that I can put them in the right loan program.
Well, I'm going to give you an example because a lot of my audience, they're first time home buyers, or maybe it's not their first home, but they haven't purchased a home in a really long time. So let's take a little deep dive with the first time home buyer programs because there are a lot of ways that people can reduce the expense of coming to the table to buy that loan. Talk about that first time home buyer incentives. Why they should buy a house. It's always a good time to buy the house if you have those three things: that credit score 650 and above, DTI 43% below, and 3 months of expenses saved. It's always a good time if you can say yes to those three things.
And I love that you help these first time home buyers get their things in order so that they are ready to go ahead and make that purchase. There are so many programs for first time home buyers. I really don't like to hear people say that they can't afford a house or they can't buy I mean, there's so many misconceptions out there. Like, definitely get the information you need. You offer a wealth of knowledge to people who are interested in becoming first time home buyers because again, there are so many myths and so much misinformation out there. There are down payment assistance programs that are available to first time home buyers. There are all types of loan programs. I actually worked with the lender that recently had a program for conventional loans where you only had to put down 1% of the
Wait,
purchase
wait.
price.
Pause. Stop the press. She said 1%. 1%. That's
1%.
better than the FHA. So what do they
Yes,
need? An
yes.
800 credit score for that 1%? What is that?
No, it didn't even require an extremely high credit score. But again, you have to talk to people. Again, you have to become educated on the fact that there are programs out there. Don't think that there isn't a way for you to become a homeowner. You have to get into these communities. Just like DB Homes for Hope, you have to get into these communities where you have access to the information and the resources because resources are out here to help you get into your first home. I mean, who would think that you could 1% of the purchase price? And the lender was actually, and not even, it was such a good program. The lender was not even financing the other 2% into your loan. The lender was paying the other 2% of the
Oh my
loan.
goodness. This is a
Yes.
major applause. Go back and give
Yeah.
that Linda a pat on the back. That is
Yeah.
huge.
So there are all kinds of programs and incentives that come around. I mean, again, different lenders offer different programs, different incentives, and they may not be long term. It could be just a promotion for, this quarter or whatever the case may be. But you don't know what programs are out there until you get into the communities, until you start asking the questions. Don't sit back and think that there's nothing out there to help you. There are resources that are out here to help you, and we love to get you on with those resources.
What I heard her ultimately say is don't sit on the sideline, get in the game. Do the mortgage application after you meet those three qualifications, though. Do not jump in the game when you're not qualified to participate. Once you have those three things, which we already talked about, the credit score, low DTI, and some savings, then you're ready because the door's open. But you have to first do the application. You can't say you're ready to go to college. You haven't filled out the application. Cannot be a homeowner if you don't fill out the mortgage application. Unless you're coming to the table with cash. Even still, if you're coming with cash, you still need the mortgage application. They think that mortgage is really the death pledge. Like it is not the death pledge.
My thing is, you're paying to live somewhere. If you're paying to live somewhere, why not use that money in a place where your equity is growing, where you have an asset? I mean, sure, there's nothing wrong with renting. I mean, but if your goal is to become a homeowner, you can. You can. And if you're temporarily renting somewhere, again, think about how much you're paying in rent and think about how that money can be going towards something that you own, that you have as an asset that can, again, that's the equity is growing and that you can do something with and get a return on if you need to sell or cash out, refi, or anything. You have that asset available to you. And if you're paying somewhere, if you're paying for somewhere to live, you can pay a mortgage.
And many times your mortgage can be very similar to what your lease is, and it doesn't go up every year. I'm a landlord. As soon as they renew, my residents renew the lease, it goes up because my expenses have likely gone up in that time period. Whereas for the most part, if you're a 15, 30-year mortgage, unless your taxes go dramatically high, your mortgage stays very steady. So it gives you some predictability. And you guys know we like predictability when we come to wealth building in terms of our budget, right? So, what are some terms like loan estimate? Like how are these important to the buyer? Help them understand.
Like I said earlier, sometimes in the real estate world, we use terms that, new buyers are not familiar with. So if I say, we're going to send out your loan estimate today, you may not even be really sure what that actually means. And so the loan estimate is, as it's called, an estimate of what the loan will cost to get to closing. And so on your loan estimate, you'll have a breakdown of the fees that have to be paid for closing. And then you'll have an estimate of what your monthly mortgage payment will be. Now, I stress that it is an estimate because there are some areas on the loan estimate form again, they're estimates. Those numbers can change. It's an estimate of what your insurance will be. But of course, if you've ever purchased insurance, you can shop around. I mean, insurance rates are different with different providers. And so your loan estimate will have an estimate of what your insurance will be. But again, that could change based on the insurance provider that you ultimately choose before you go to closing. Things like your taxes, that's again typically an estimate of what your taxes will be for that, property, again, based on the zip code and location of the property, the taxes. And then also based on where you're purchasing, the states are different. Some of the states have different, and counties have different regulations on how much has to be in escrow. And that's another term that sometimes home buyers are not familiar with. But how much has to be collected? Your escrow is how much is collected for your taxes and insurance in advance. Some places require 12 months in advance. Some places only require 2 to 6 months. And so again, your loan estimate will have all those numbers on there, again, telling you all the fees that you have to pay for closing. And again, it's an estimate. There it can, go up or down, and then it'll have the estimate of what your monthly payment will be. But the loan estimate basically gives you a snapshot of what to expect that you will need to pay at closing. And then it gives you a snapshot of what your monthly payment will be. And so you'll be able to see going into the loan process what your monthly payment will look like after you get through closing.
So that's important. Predictability. So there are mainly four things that encompass the loan. It's called pity: principal, interest, taxes, and insurance. It's not a pity that we have to pay it. It's a pity if you don't. So don't go beyond 30% of your income, because otherwise you have this house, but you can't eat. You can't do anything. You're sitting on the floor. It's called house poor. Yeah. And you guys know in DB Homes for Hope, we're not trying to be poor. There will be always poor, the Bible says, but we don't have the volunteer to be one of them. Any person that DB Homes for Hope is telling you about, that's bringing to you, is a person like-minded, a coach, an educator, someone who's going to walk you through the process until you gain understanding. We don't invest in things that we don't understand. We make sure we know where we're going. So we're going to understand terms like loan estimate, understand terms like the escrow, money that's collected, 3 months, 6 months, 9 months, a year of taxes up front. So you understand what these things are so you can get to that clear to close and also lock in your interest rate. I know a lot of people are saying, well, I want to wait till the interest rate goes down. But what if it doesn't go down for 5, 10, 15 years? Are you going to not own in the process? That's ridiculous. It is a good time for you to buy when you have that 650 and above credit score, when your debt to income ratio is below 43%, and when you have 3 months of expenses saved, because there's an appraisal that you have to pay for. There's an inspection that I tell you you want to get. So you need to have some money. And even in a brand new house, there may be like something wrong. You need to have the money to pay for it because you won't be able to call the landlord, come fix my problem.
I have to say that we don't know if or when interest rates will go down. But I always tell people who are interested in buying a home who say that they're waiting for interest rates to go down, don't wait. Don't sit around continuing to pay rent waiting for interest rates to go down. Because what happens when or if interest rates go down is that now you're in a more competitive market. And when those interest rates go down, the home prices are going to go up. You have no room for negotiation, and you're competing against everybody else who waited for interest rates to go down and who are ready. And so then you're going to have to overbid for the house and again have no negotiation. So you're not going to really save money because you waited for interest rates to go down. If you're in a position to be a homeowner and go ahead and get into home ownership, don't wait. You can always refinance when interest rates go down. And sometimes refinancing may not even make sense if it's only going down, a quarter of a percent. I mean, that might be a difference of $10, $20 in your mortgage payment. Don't wait for interest rates to go down. If you have the buying power, buy now so that you're not competing against everyone. And again, you're not in a market where people have raised the home prices.
So you have given us so much to chew on, Carmelita. So how will my audience, how are my people who are watching, how will they know how to get in contact with you? We're gonna put in the show notes, but how will they reach you?
Absolutely. I'm excited to work with anyone who's following you, anyone who's in your program, or anyone, like I said, who's following you, because I know if they're following you, they're getting the right information and they're on the right track. If you want to reach out to me, send me an email. My email is CT as in Tom, Keith, Keith, at nexamortgage.com. I'm sure Coach Davina is going to put that information on the podcast and make it available to you all. But I would love to help you. I'd love to answer any questions that you may have. But again, if you're following Coach Davina, if you're watching this podcast, you're in the right place because she is giving you the information that you need to make you a successful homeowner.
Amen. Well, thank you so much we're just so glad to have you today that you came and gave us a few minutes of your time. And the other thing I want listeners to know is that she's nationwide. She's not limited. She's nationwide. So if you're listening in Florida, if you're listening in Virginia, wherever you're listening, you can have this educator who's also a mortgage lender on your team. The more people in our village, it's very clear, a nation falls because of lack of counselors. You've got all of these people. Take advantage of the resources so that you can what? Have money.